Good morning again. It's time for another financial breakdown. It's Wednesday, March 24th. U.S. stocks have been deepening their slide now that the cost of Joe Biden's $1.2 trillion relief bill are becoming clearer. Also, the two-year bond yield increased to 0.15% in yesterday's auction. The dollar continues up at a snail's pace this morning after February home sales declined by 18%. Triple the expected cut, and Dallas Fed head Bob Kaplan said there was a good chance of an interest rate hike in 2022. The same point in time that Janet Yellen also told Congress yesterday that she expects employment to be back to normal. Still ahead today, mortgage applications at 11 a.m. GMT with durable goods and PMIs early this afternoon. European markets closed mainly down yesterday, except for the DAX, which added 0.03%. Today, we're all back in a slide after Italy's industrial sales improved nicely in January. They're up 2.5% month on month, which is double December's result. While the pound deepens its drop as this morning, CPIs miss expectations, but manufacturing and service PMIs in Britain add about a point each. The news on cable is now officially bad, as we can see on the daily candles. We've crossed well beneath our 3-week moving average, and volumes are deeply red. We're sitting at a major Fibonacci level from our way up, and on the hourly chart, that bearish engulf seems to tell us that this short-term respite is over. With not much more from the UK today, so the technicals seem to have it. Still ahead, we've got more PMIs coming from across the Eurozone. Germany's 10-year note goes up for auction in about half an hour. And finally, EU consumer confidence will be out at 3. The threat of US tax hikes, more Euro lockdowns, and risk aversion have Asian equities hitting a 2-week low overnight. They continue falling, led by the Hang Seng and Nikkei at over 2% apiece. Australia's S&P managed to claw out a 0.5% increase, and the Dow Jones New Zealand added 0.03%. Manufacturing and service PMIs in Japan for March are up about a 0.5 point each. The nation's central bank yesterday published its latest meeting minutes. They indicate hopes of European recovery, while Chief Kuroda says he's committed to continuing easing so as to achieve that fleeting 2% inflation rate. And not surprisingly, China is well behind its commitment to purchase $378 billion of U.S. goods, 33% behind, according to Bloomberg. Reuters this morning reports that the world's largest banks cut lending to oil companies by 9% in 2020 due to decreased demand, and this past month finally stopped backing coal mining. Oil, we can still see a lot of negative sentiment despite what looks like a recovery. At the moment, volumes are low, but yesterday's were highly bearish. This morning, we're looking at some optimism and a positive RSI. We still didn't cross below S1 overnight, but the week is still an open book. At 2:30 this afternoon, the API's inventories report, and tomorrow the EIA, neither of which in recent weeks have been offering much hope. Disruptors rule today's corporate lineup, with Reuters reporting Gamestop intends to monetize its 800% stock surge. The company is planning a $100 million issuance now that its earnings report is behind us. Sales fell $2.12 billion year on year, while income increased to $80.5 million. Meanwhile, Bloomberg informs us that Robinhood has filed for an IPO on the NASDAQ, and Intel is expanding its U.S. chip manufacturing to the tune of $20 billion. It plans to build 2 new plants in Arizona and farm its capabilities out to external clients, again, according to Reuters. Yesterday, the company reported it expects 2021 revenues to total $76.5 billion, pushing shares up 5% after hours. And Adobe yesterday published a 26% year-on-year increase in Q1 revenues. Tencent and General Mills will be reporting earnings later today. That's it for now. We'll be back again on Thursday. That's tomorrow.